Ajay Loganathan joins us to talk more about trade. Ajay, hi, afternoon to you. What have you made of the market? Little bit of a fatigue is what we're seeing going into trade, but we have many triggers lined up, not just the earnings season, the budget as well. Where do you see it headed from here?
Absolutely. Good afternoon. I think, if you look at it from a macro standpoint, or if you look at it from the global standpoint, I think there are very clearly structural issues globally when you look at government debt levels, etc. The quantitative easing cycle, when is that going to end? So those are concerns that people have at a global level. I think domestically, as you rightly point out, and I think from the kind of numbers that we've gotten so far, whether it is GDP, whether it's IIP, more importantly, which gives us some indication of things to come, is like manufacturing PMI, for example. Those numbers have been exceedingly good and much better than market expectations. I think December, if you look at December manufacturing PMI as well as services PMI, numbers were very good, 55.6, I think, on the manufacturing PMI, up from 44 last January. So that's very clearly an indication that things are turning around in India. The other thing that you talked about, obviously, I think the biggest event going forward over the course of the next 2 to 3 months is the budget, and leading up to the budget, the kind of announcements that we're going to get, the kind of news flow we're going to get. The second year of a bull run, that's what we're sitting on now. I think last year, the kind of returns that we've got in the equity markets, you had significantly low valuations in March. You've got a rebound of economic numbers through the year, and even now we continue to get those. But a lot of that seems to be factored into the markets where we are today at 17,600. So the biggest influence, I think, on the markets are really going to be what FIIs do. I think clearly through all of last year, through 2009, what has really driven our markets has been FII flows. Domestic participation, if you look at mutual fund numbers into equity, has been flat to actually negative. And the FIs have over the last 9 months pumped in close to $20 billion. So that I think is going to drive our markets going forward as well. I think from a news flow standpoint, we expect news flow to continue to get better as we get whether it's earnings, whether it's PMI, whether it's IIP, etc. But a lot of that is already factored into these levels of our markets.
Going into the earnings season, what's your view on one particular sector? The IT sector is the sorest point in trade today. Of course, due to the appreciation of the rupee, there are concerns there. But what's your call on that entire sector, and anything from that space that you particularly like?
Yeah, IT is actually right now, and has been for the last few months, one of our overweight sectors. The biggest concern has been really the appreciation of the rupee, and that's something that we acknowledge. But the fact remains that if you look at companies within that sector, very strong balance sheets, very strong cash flow, and I think with the recovery in the BFSI space, with the recovery in the global economy, this is one of the sectors that is going to benefit. I think if you look at the next quarter or two, I think you might see numbers that might not be out fantastic. But from a longer term perspective, given current valuations, that's a sector that we continue to like. Selectively, obviously, companies that are well positioned to take advantage of the recovery in the BFSI space globally. So we like it. I think you're going to have knee-jerk reactions from time to time with the movement of the rupee, and obviously, I guess we've got earnings coming up over the course of the next couple of weeks, where most of the major IT companies are going to start to report, but an action leading up to that. But I think from a longer term perspective of the next 12 to 24 months, that's a sector we continue to like.
All right. What's your view on the entire metal space? LME prices have skyrocketed right now, and the view is that going into this earnings season, this will be one pocket that will lead the growth and have the best earnings as far as the sector is concerned. Do you like this space particularly, and any specific stocks if you could name?
Not a space that we like, largely because one is one is, as you rightly pointed out, we've seen not only prices rise, but more importantly, stock prices rise. And with the stock prices having risen, valuations are no more compelling. At a global level, for some time now, we've been concerned about excess inventory and metal prices especially being muted over the course of the next few months, but that hasn't been true. I think the demand from China has been reasonably strong. You've seen prices move up. I think we should see that following through in India as well. And as you rightly point out, I think one is on a lower base. You're going to have some reasonably strong numbers. The other thing to look at going forward is a lot of capacity expansion that is happening within the space, and those seem to be factored in. We feel in the near term, metals really could be one of the sectors that underperforms and will give you better entry valuations. But at current levels, it's one of the sectors that we are underweight on.
Rohit, what kind of correlation that you were talking about in terms of the global movement as well? You know, if you were to pick up a market like China, you are seeing bond yields going up. In all likelihood, interest rates across the world are going to be rising up. Do you sense that the Indian market and Indian equities per se are factoring that in, which could just happen any time?
No, I think you've got if you look at the rate cycle, I think the likelihood of rate hikes globally, I think it is more to do with the emerging markets like China or India, where you've got inflation that is becoming an issue. I mean, 4.8, and our expectation is really to see possibly closer to 7-8% by March. So the RBI has to act. And the other conundrum there is, I mean, look at the global markets. You look at the U.S. You look at the developed markets rather. In the developed economies, we're looking at still muted growth. I don't think we're looking at significantly higher growths where your central banks can afford to raise rates in any sort of a hurry. In fact, in the U.S., we are not expecting any rate hikes till possibly the end of this calendar year. So in that environment, you've actually got the appetite for risky assets and the continuation of the search for yields, and that's where the allocation to India could continue. Obviously, if you start to see rate hikes here, we will be one of the first few emerging markets to actually start to raise rates, and with that, you could have some sort of knee-jerk reaction.
What's your call on Reliance Industries particularly right now? Because in the last 10 or 15 trading sessions, it's pretty much been the anchor for this market. Going into the earnings season, do you have any kind of concerns on the refining margins and the outlook on that front?
I won't be commenting on individual stocks, but I mean, I think if you look at the sector, if you look at energy per se, and if you look at oil, and you look at the capacity expansions and the output that we could continue to see over the course of the next 12 to 18 months, that bodes well. I think if you look at valuations currently, a lot of that some of that is reflected. So we are neutral. We are neutral on the space as a whole. And you're going to see some of these companies moving in line with what oil prices do. Now, oil prices have shot up over the last few days. Oil at 83. So you're going to have movement based on that. But I think overall, if you look at the sector, we are neutral. We are neutral energy in the oil and gas space.